In this video lesson, I'm going to talk about trading the financial markets. I'm going to focus on how can we trade the TTM squeeze and make it more effective. So discussing market posture, we always look for our intermediate term posture first, right? Is the blue above the pink, which is the 8 exponential above the 34. A very easy way to determine your intermediate term trend is the blue stacked above the pink. Moving averages are trending indicators, hence the word, and again, trending. They're only valuable when they are either trending up or trending down. When they start to go flat, they're no longer valuable. And lots of traders, what they'll do when the market goes flat is they'll just remove the indicators altogether. Okay? So look at the S&P 500. One of the things I want to talk about is on market posture, we're going to dive into short term. Short term is critical. Now, I'm not discussing day trading, okay? So if you're short term trading and you're day trading, different animal all by itself, okay? I'm talking more about right this moment in this video on the daily time frame, okay? When I learned how to trade, that's the time frame that I learned how to trade on. It fit my lifestyle beautifully, and I made consistent income along with my mentors who traded the daily time frame. Now, one of the things that we were talking about when we're talking about short-term posture is the hardest one to get, right? We talk about highs and lows. And if you see here, these green boxes, they represent highs and lows. So you got to know how to determine what is a high. A high is a close below the low of the high day. So assuming that that's the close right there, it closed below the low of the high day, right? Now, we add an extra caveat to that, is it closed below the low of the high day or any inside / following day, right? That bearish harami, that inside bar. I mean, look at this harami right there. Okay, you see this bearish harami. Yes, the body is inside the body, but it did not close below the low of the high day. So, because of that, we have not drawn a box. Now, we've already got a low, so the next progression is a high. So now, look where we're at in the S&P 500, and we're about to fire. We're breaking resistance. We still are climbing to the upside. The lows are getting higher, and the highs are getting higher, except this little pennant that we got, right? A pennant, right? For those of you that know technical analysis, you know that we got us a little beautiful inside bar / pennant, boom, and it resumed to the upside. Until we close below the low of the high day, which right now, that's the high day because this candle has not closed. We will, the short term, as Dave Johnson would say, the 3-day short term is up. Now, my short-term posture, whenever we get anything other than higher highs and higher lows, it shifts to neutral. But because we're breaking high, I'm now neutral to bullish. And I will be full-blown bullish once we pull back and bounce, but neutral to bullish. Okay, that's my short-term posture. And the reason why your short-term posture matters so much is the TTM squeeze is a short-term trading strategy. So what we're trying to do is match our short-term posture with when do we trade the squeeze and when do we not. Is that making sense? If you're going to trade the daily time frame, and that's why I stress the word daily time frame, this stuff is the game changer. So one of the things that, again, I go back constantly and I think about when I did the best and what I did not. I'm always reviewing my notes. I've got 10 to 11,000 pages of notes, and I'm always reviewing my notes. And I'm just looking back, and every time that I would take class, I would write the teacher at the top, like Scott Thompson, Dave Johnson, Dave Settle, Blake Young, Mike Follett, right? Tom Sosnoff. And what I would do is I would categorize my notes based on them. So as I was going through them, I would be putting a pile of Scott Thompson's, it's got Dave Johnson and stuff like that. So I was reviewing my notes with Dave Johnson. Okay, last night I was just going through them. I like to go through them periodically because we're always learning, as Rafa always so eloquently puts. So one of the things that I'm always trying to do is give myself an advantage, right? And going back through my notes, and it's interesting because, as I was writing the notes, I would highlight stuff and I would put important, I would draw stars, I would draw arrows. And just going through about 50 pages last night, just kind of skimming through 50 pages just to look for the ones that I wrote important. Just kind of flip it. Oh, important. Okay, flip. Oh, important. There was kind of a common theme on some of them, and it had to do with, again, and Dave Johnson taught this so much, and I don't know if I paid attention to it as much as I am trying to get everybody to pay attention to it now, was align your strategy with market posture. And again, let's talk about daily. Not talking about day trading. I always have to go back to that. It's a different animal. I've made a lot of money on the daily time frames. A lot of money. And I know you can make a living because even though I had a full-time job, the amount of money that I was making consistently not consistently, I sucked for a long time, but once I figured it out, trading was more than what a lot of people will make working their full-time jobs for a year. And that's pretty, that's like easy. Okay. A lot of more money than they were making. And I was just doing it in like an hour to 2 hours a day. But this theme right here. So we always want to ask ourselves, what is the broad market doing? And then we trade based on what it's doing. For example, the broad market right now is at resistance. It's at resistance. So we got to think. Since the market is at resistance, we need to align our strategy with what the market's doing. So right now, when I look at this, I think to myself, okay, the market can break out and run for a couple days. Could break out 2 to 3 days, pull back. So if, and the key word is if it breaks out, we expect a couple more days of positive momentum, and then we pull back into a bull flag. Now, we have a better chance if we're trading, at least coincidence stocks or leading stocks in leading sectors. And again, remember, daily. We're digesting the daily time frame. This is the key to your trading, the daily time frame. Is this making sense? Whether you accept it or not, this is the golden ticket. I'm aligning my strategy and I'm focused. I'm like narrowed in on what I trade. So remember, what we're doing is we're simplifying the way that we trade the squeeze. We're making it more effective. We're aligning what's happening with the market with when we trade the squeeze. Does that make sense? If you'd like to learn more about trading options, I encourage you to check out my Options Elite Masterclass and all the bonuses that I'm giving away this month, like my TTM Squeeze course for free, plus that Forecast Pro indicator. I'm giving that away free this month to anybody who gets my Options Elite Masterclass. So check down below in the description if that interests you. Now, if you like the TTM Squeeze Pro indicator,